Good morning, everyone. So here in in last three sessions, when we started this chapter, that is the fund flow statement, we have seen in last session that is how the four important steps are to be studied for the preparation of fund flow statement. And already in last session we have seen very clearly the first statement is changes in working capital, schedule of changes in working capital we have seen. Second, also we have seen that is the preparation of the fixed asset account, and finally third step we have seen how to prepare the or how to calculate funds from operation by preparing the statement form. So here, and second format is it is adjusted P&L account format. So here the funds from operation is also calculated by preparing the adjusted profit and loss account, and this adjusted profit and loss account is prepared in T format. T format means particular amount, 4 columns we are preparing, and in that we are writing all the things or entering all the things, and we are finding the funds from operation. We will see the format, we will study the format next. First of all, first we will study the theoretical aspect. Here it is prepared in T format. It starts with figures of net profit and net loss as arrived from the profit and loss account already prepared. So here it starts from the profit and loss, that is net profit or net loss, which was arrived from the profit and loss account already, which we have prepared. On credit side, that is income side, here and the adjusted profit and loss account is having two sides. One is income side and second one is expenses side. So here on credit side we write income, we tell it as income side, and on the debit side we tell it as expense side, expenditure side. So therefore on credit side, first we take credit side, that is income side. Operating profit and loss account and non-operating items are recorded. So here opening profit and loss account and non-operating incomes. In statement form we have seen what are the non-operating incomes, and also we have seen what is the opening balance of P&L account. The opening balance of P&L account we get from the P&L account or give the information given in the problem. So here first you have to take the opening balance of P&L account and non-operating incomes, and you have to record these two things on credit side or income side of the adjusted profit and loss account. Next one, on debit side, when it comes to expenditure side, all non-operating expenses are to be recorded. So all non-operating expenses means all the things we have taken, the transfer to general reserve or depreciation or any loss on sale of asset or any purchases, etc. What we have expended, all the things are recorded on the debit side or expenditure side. So here the balance figure in this case will be either funds from operation or loss from operation. So here after recording both side, that is income side and expenditure side, after balancing the account, finally we have to balance the account. After balancing the account we get some amount, that is balance carried on. It may be a funds from operation or loss from operation. We can get either one, or profit, funds from operation or loss from operation. If debit side is more than credit side, the difference balancing figure known as funds from operation. Here if the debit side is more, that is expenditure side is more than the income side, automatically we get fund from operation. And if the credit side is more than the debit side, the difference or balancing figure is known as loss from operation. So here if the expenditure side is more than income side, automatically we get funds from operation. And if the income side is more than expenditure side, here it is known as loss from operation. So here adjusted profit and loss account format is given. So we are seeing that on debit side or the expenditure side the recorded items are depreciation on asset and all non-operating expenses, that is capital loss, loss on sale of fixed asset, premium on redemption of debentures and preference shares, fictitious assets written off, preliminary expenses, underwriting commission, discount on issue of shares and debentures, advertisement and suspense account. And same way income side or credit side, by opening P&L account we are taking non-operating incomes like dividend received, rent received, interest received, dividend, proposed dividend, etc., transfer fee, profit and sale of fixed assets, profit on revaluation of asset, profit of excess provision. So we are taking what we get as the income. Such items are recorded on income side or the credit side, and all the expenditures what we made or what we pay out or when the cash goes out, such as called as expenditure, and these are recorded on the debit side of the adjusted profit and loss account. And finally, and the other things, intangible or written off, goodwill written off, patent rights written off, copyright, appropriation of profit, that is interim of final dividend, income tax, provision for income tax, transfer to reserve, and last finally we are taking closing profit and loss account. So all these things, after recording all the income side and expenditure side, finally when we balance it, we get the some closing balance. Such closing balance is known as either it is a funds from operation or loss from operation. So here, if the debit side is more than credit side, automatically we get funds from operation. If the debit side is more than credit side, credit side is more than debit side, automatically we get loss from operation. So like this, adjusted profit and loss account is prepared to find out funds from operation. So the final third method is direct method. So here, under this direct method, profit and loss account is prepared for showing income only relating to the business and expenses which are paid relating to the business. So here only in direct method we are taking only the here only we prepare the profit and loss account, and we show incomes relating to the business and expenses relating to business we consider, and the difference between these two will be the funds from operation. In these cases, while calculating funds from operation, non-cash items and expenses and non-cash operating incomes are considered. Non-cash items like depreciation. So here we consider only the incomes and expenditure relating to the business. So non-cash items and non-operating incomes are considered, or non-cash expenses and non-operating incomes are considered, and the difference between these two things will be the funds from operation. And here non-cash items is example is depreciation. Non-operating expenses includes trademark, goodwill written off, preliminary expenses, patents and loss on sale of asset, discount on issue of shares and debentures, proposed dividend. And the non-operating incomes include profit on sale of fixed assets, dividend received and refund of tax, and the preparation of fund flow statement here. So final is preparation of funds flow statement. How this fund flow statement is prepared? It is the last step. Fund flow statement or inflow of funds, statement of inflow of funds and outflow of funds. Inflow of funds refer to the sources of funds or coming in of the funds. It may consist of further issue of shares, debentures, rising of loans and advances, sale of investment, sale of fixed assets. Already we have discussed what are the sources. Sources means whatever we get into the business in the form of cash, such as called as the cash inflow, and whatever go in means of going out of the funds, it is nothing but because of use of funds such as redemption of shares or payment of debentures or payment of preference capital or any purchase of fixed assets or payment of dividend or payment of income tax. What we pay outside, whenever we pay, the cash goes out, that time automatically it is called as application of funds. If we use the fund or the fund goes out, means it is application. If the fund comes in the business, it means the source of funds. So like this, here it is a format pro forma of fund flow in the form of statement. So here first of all we are taking operating profit or funds from operation. So here first of all you have to take funds from operation. This funds from operation we get from the, already we have prepared the funds from operation statement. From that you have to take the funds from operation and you have to write on the amount column. Then non-operating and non-trading income such as dividend. So here non-operating incomes are to be recorded. Then issue of shares, preference shares, equity shares, etc. And whenever we issue of shares or the preference shares, automatically the funds will come. That it means it is a source of funds. Issue of debentures. If debentures are issued, such time it is called a source of fund. Borrowing long-term loans and loans, acceptance of long-term loans, deposits and sale of long-term investment. By selling the investment, automatically the funds will flow inside of the firm. Automatically it will be a source of fund. Then sale of fixed assets and decrease in the working capital. If there is any decrease in the working capital, such decrease in the working capital is recorded in the fund flow statement. So here decrease in the working capital we get from a first step, that is preparation of schedule of changes in working capital. From that we may get increase or decrease in the value of working capital. If it is decreased, it is taken under the head sources of funds and uses of application of funds. So application of funds means here operating loss or funds lost in the business operation. If there is any funds lost in the business or loss on funds from operation, so non-operating expenses such as dividend paid, income tax paid, fine paid, etc., such are taken under the head the non-operating expenses. Then redemption or repayment of preference shares, debentures, then long-term repayment of long-term or medium-term loans, repayment of long-term or medium-term deposits, purchase of long-term investment, acquisition of purchase of fixed asset, increase in working capital. So here all these things we have to record under the head the sources or application of funds. Whenever the word application comes, we have to think, or the answer comes into our mind that applications means the fund is flowing out, because whenever the fund flows from out from the business, it is called as application or use of funds. So here these are some circumstances under which the funds flow outside. That is if there is any loss, or if we paid any expenses, operating expenses, and we pay any redemption or the repayment of preference shares, and repayment of debentures, repayment of long-term loans, medium-term loans, repayment of long-term deposits, any purchase of investment or any purchase of fixed asset. At the time of all these things, the funds will automatically flow outside the business, and such case is called as application of funds. So like this, the fund flow statement is prepared, and this fund flow statement should be tallied. So finally, there are some rules for preparing the schedule of changes in working capital. So here, if there is increase in current assets, results in increase in working capital. Automatically, if there is any increase in current assets, it results in working capital. Means whenever we purchase the current assets, automatically the working capital will increase. Decrease in current assets means results in decrease in working capital. If there is any decrease in the current assets or sale of current assets, automatically there is a decrease in working capital. The liability will be more and the assets will be less. The increase in the current liability results in decrease in working capital, and decrease in current liability results in increase in working capital. So these are the 4 important rules we have to follow at the time of preparing the schedule of changes in working capital. So this, like this, we have to prepare the we have to follow 4 important steps for the calculation of or the preparation of fund flow statement. So thank you, students. So this now in from the next session we'll take or we'll select some problems and we'll solve, and we'll see how the changes in working capital or funds from operations or account fixed asset account, and how the fund flow statements are prepared. We'll study one by one. Thank you.